Okay, everybody. I hope everybody is enjoying the weekend. Today is January 31st, 2015. In this video, I'm going to go through and some of the breadth indicator and see how we look at some of these indicators to kind of give us a little read on the state of the market and what to expect. So let me explain the chart that I have in on the screen here. The first is I have the S&P 500 line chart here. That's basically the close daily closing price of the S&P. And then here I got in the middle, I got the New York Stock Exchange advanced decline. This is a cumulative chart of the advanced decline, and essentially it's just the sum of each net difference, on the advanced decline. So just like OBV, right, based on the update, we add the volume to the previous total, cumulative sum. So on this advanced decline line, is basically we're taking net difference between the advance and the decline for that particular day. For example, on Friday, we have much more declining issue than the advancing issue. So basically, we add up a negative number, right? So we add that negative number to the previous sum. Essentially, we are subtracting, the difference, right? So basically, that's what the cumulative, advanced decline line is derived. Okay, and then I also have the New York Stock Exchange new high, new low. This is the net, new high, new low. So we basically again we're taking the difference between the number of new 52-week high and the number of new 52-week low. Okay, so if we see a positive number, that means, for example, Friday, we got a 156, positive 156. That means there's 156 more new 52-week high issue than the new 52-week low. Now that doesn't mean that there is 800 new low and 956 new high. Okay, it could be 256 new high and 100 new low. So the net is still 156. Okay, so. And then on the bottom, I also have the VIX, so it's kind of like it's a sentiment indicator more than a breadth indicator because it's a measurement of, the traders in motion, more of a fear indicator. So it's more of a sentiment rather than the market structure of, what is pushing the market, in terms of, the number of issues being traded, how it react, that sort of thing. So the thing that I want to highlight here is you can see that first of all, the VIX is more of a coincident indicator, right? Because you can see that when it peaked, it's also coincide with the market bottom or market low, right? Okay, yeah, you can see that what I have is drawn on a blue line here. You see every time it's sort of when the market go into a corrective phase and make a low to in that corrective phase, we see the the VIX kind of peak when it makes that extreme low there, right, for that particular swing. Okay, and you can see like here, and kind of peak here. So the VIX is more of a coincident indicator. Right? It's not a leading indicator. It's not a lagging indicator. So we could only look at it going back to say, aha, it's a confirmation that it also peaked out while the market made a low. Okay, such as back in the October, December and October time frame there. Right? Okay, so the things that were really important is that now I'm not saying that the advanced decline line will always kind of tell us is the market top is coming or not. Okay, and also it doesn't tell you when it's going to top out. So there's other indicator that we have to watch to kind of get some idea is the market have kind of peak out on this particular swing. Okay, but in this video, we're just going to focus on the market breadth indicator, especially on the advanced decline. You can see that every time, before, the market, before the market get to the new high, the advanced decline line kind of leading it, right? It's going along, see, we're making a higher high while the market making a higher high. Then when the market, when the advanced decline line start to diverge, in the negative sense, when it start showing some divergence, you can see that it's kind of making a little bit of a lower high, while the market is still making a higher high and then start to peak. Same here, right? You see this, the advanced decline line is climbing, so the market is also climbing. Then it's kind of pulled back on the advanced decline line while the market is peaking. Right, same here, right? So you can see that it's just kind, and then here's the peak, and you can see the divergence, that negative divergence on the advanced decline line, okay, on the while the market is peaked. So what does it tell me right now if I look at that advanced decline line? Well, the advanced decline line is still, going a higher high here while the market is pulling back. So at least, based on these type of performance, it's kind of indicated to me that, there might be another peak coming on the the S&P. So maybe we are getting a little bit of a rally, a little bit of a correction here or pullback, and maybe get this VIX to peak out somewhere around this 22, between 22, 25 level here. And then, basically, maybe, when this thing come up, and and we might get a little bit of a, coming down, maybe get a flush down here, try to test this December low, right, and then come back up. So while this thing maybe, as it, try to make a, this market is making a new high, maybe this thing is start to, kind of coming down, and that might be another sign that at this swing we might see a bigger correction, and maybe the next time it might come down and test this October low. So maybe we get something down here, and next time maybe we'll get up to that 30. We don't know, right? But right now, at least what we are seeing is what the what this market is telling us, especially the advanced decline line, is that it seems to indicating that we might see another bounce on the S&P 500. Now again, it doesn't tell us when that bounce is going to come and how high the bounce is going to be. Okay, it's just telling us that what to look for in terms of the direction. Okay, so and then if we look at the Nasdaq, okay, the Nasdaq again, we can see that the the VIX here is also coincide with some of the, the low, right? And then you see that the advanced decline also making a higher high, leading the market to a higher high, right? But the difference between the Nasdaq here, because I got the composite here, okay, and you can see that it doesn't tell us, right? We did not get that negative divergence on the advanced decline line as the Nasdaq make a make a high, right? And unlike the S&P 500, you see this, right? The S&P 500, you see that divergence, and we are not seeing that divergence. But it does tell us that as the advanced decline making a higher high is it confirms the higher high on the the Nasdaq. And the things that to look at right now is that the negative divergence, and that kind of explain why the market feels so weak, especially in the Nasdaq, right? Because it's essentially, you can see the advanced decline line is also making a lower high here, while we see a little bit of a higher high recently, okay? And it's because we're essentially seeing less and less number of issue that is advancing on the day that the market is going up, the Nasdaq is going up. Right? And that's what it's telling us. So internally, there's less market participant, or the number of stock is participating in pushing the Nasdaq to a higher level. Okay, so that kind of tells us that there are internal weakness inside this Nasdaq market, and you can see that the reason why the Nasdaq is holding up is you look at these large cap tech stock like Apple, Google, Amazon, Netflix, and those guys. It's basically they are kind of holding up the Nasdaq. Right, pretty much. And then if you look at some of the lower, smaller cap inside the Nasdaq, you see that a lot of them have not recovered. When they got clobbered back here in October. Okay, so you can see that the Nasdaq is getting a little weaker, and it is sort of expect that, right? When we are looking at the market, in terms of flight to quality. Right, so that's why you see there's a little bit more strength in the S&P or the New York Stock Exchange than in the Nasdaq market, right? Okay, so again, you look at this. So essentially, what it's telling us is, the Nasdaq is getting weaker, and if we look at the bigger trend, you see this advanced decline line is actually trending downward, while the index is making a little bit of a upward move. Unlike the S&P 500, you can see that it's trending in the same direction as the advanced decline line. So we're kind of getting a little bit of a confirmation. So that's basically what the market is telling us is kind of be careful. There is something changing. There is a little bit of a possibility that we could get a little bounce after this corrective phase. This little pullback is done with. We don't know when, but I think we might see a good possibility of a newer high before this market rolls over, and that's basically what some of the breadth indicator is telling me. So, I mean, it could be totally incorrect. I mean, nothing is infallible, right? But we just have to go with it until it tells us otherwise. So, good luck and enjoy your weekend.